Hello, this video from CalculationCrunchers.com will follow the quick setup of a typical mortgage loan using Mortgage Maker Pro. Mortgage Maker Pro acts as a loan origination program designed for mortgage loan officers. Looking into the actual program itself, you notice across the bottom of the screen here we have our navigation tabs. The navigation tabs allow us quick, easy access to all areas of the program. You may also notice that we're currently on the welcome screen. The welcome screen provides the program's welcome information, the licensee name, the mortgage name and address, mortgage company name and address, as it will appear on all documents created by Mortgage Maker Pro, as well as below that the license agreement and license for use, and below that the instructions for use for the program. And moving beyond that to the next screen, we have our deal worker screen. This is the typical setup screen that you'd see. This is where you would come to set up a new mortgage loan. Over here in the upper left, you see the current mortgages for the borrower, the mortgages that are going to be paid off. They have been marked, all three of them to be paid, all three to be excluded from the debt ratio. And below that, we have our credit debts, marked which ones need to be paid off by my loan, my new loan, and which ones need to be excluded from the debt ratio. In the upper right, we have the new loan information, the loan amount, the interest rate, the term. This is set up as a fixed rate loan and is set up to be not an interest only loan. If I decided to set it up as something other than a fixed rate loan, I can choose a 1 year, 2 year, 3 year, 5 year, 7 year, 10 year ARM, or a negative AM loan for my option ARM. Also, I can come down here and set it up as an interest only loan. If I choose yes, the interest only area opens up. I can set in the amount of months that I'd like it to be interest only for, and the loan now becomes an interest only loan as the intro period. Right now, I'll keep this loan as a straight regular amortized loan, so I will tell it not to be an interest-only loan. Down below that, you have your property value, your current household qualifying income, the current tax-effective interest rate based on the information I've put in. The borrower told me they fell into the 33% tax bracket, but you have your choices here, and that gives them a tax-effective interest rate of 5.3533%. And below that, you have your blended interest rate. If you're setting up a second mortgage up here and your borrower currently has a first mortgage, you can plug in the information from their first mortgage and tell them what their true blended interest rate would be. Most guys, or a lot of guys in the industry, will use a weighted average rate as the blended interest rate. However, there is a difference, and this program will give you a true blended interest rate if the scenario calls for it. And down below that, you have your ARMS detail area, your ARM detail area. Currently, it's grayed out because we have not selected an ARM above. But if we go up here and select this to be let's say a 3-year ARM, the ARM area opens up. You can put in your margin, your index, the floor rate, everything you need to put in to set up an ARM loan. Once you put that information in, automatically the first two rate adjustment dates will show up, as well as the best and worst case scenario payments that could occur at those dates. Moving below that, we have our option ARM area. Again, this is grayed out because we haven't selected an option ARM. So put it on negative amortization. And down below, the option ARM area will open up. You can put in information for your scenario. I have some information in there right now, which gave it an automatic, show up, or automatic calculations of the first payment, or the rate changes, and the loan balance at those points, and the loan payment or expected loan payment at those points. Below that, we have our qualification figures. You have your loan to value, your debt ratio, your monthly disposable income, Section 32 tests, APR, everything you should need to make sure your borrower qualifies or doesn't qualify for whatever program you're trying to get them into. Now, different programs will have different requirements for debt ratios, especially if you're using an option ARM as we have it set up right now. For this option ARM, I am using the fully indexed, fully amortized month 1 payment to qualify my debt ratio. I could choose, some programs may require a fully indexed interest-only month 1 payment. Maybe I should need a 37-month payment, or I can use just the first regular monthly loan payment due. Whatever your program calls for, the choice is likely there, and you can make sure you're qualifying your borrower off of the correct figure for your debt ratio. And moving beyond this screen, we can go to our closing costs area. The closing costs area is set up typical to a standard HUD-1 settlement statement. You put in your fees as you need, put in your interest, day's interest, put in which fees you need to be affecting your APR, and over here on the left you can designate which fees are going to be paid outside of closing, if any. You have your Section 32 test here as well as the cash out to borrower and other figures showing up here, so you don't have to flip back and forth between screens. Beyond this, we have our loan presentation sheet. Loan presentation sheet shows several key points of your loan, depending on how you've put the loan in on the setup sheets. This sheet has been responsible for several sold loans over the years. Several customers of Mortgage Maker Pro have told us that the borrowers have received this form well. And moving beyond here, we have our charts. The charts break down the monthly payments and the loan balance in different ways. This one shows your principal interest over the life of the loan. This is this is a negative AM loan, showing up pretty unique. This is a breakdown of the principal versus interest over the life of the loan. This is the loan balance, and this is the principal versus interest paid over the life of the loan. Let's set this back to a fixed rate loan. Oops. And we'll come over here to the amortization schedule. Amortization schedule allows for extra payments to be sent as you need. You can put in $50 one month, a few months later you can put in $150, and a few months later you can put in $3,000 and see how that affects the loan, how the extra payments affect the loan. Summary is always shown up here at the top, or you could just scroll down to the bottom and see where the final payments are made. Moving on, you have your 1003 loan application. Figures are self-populate on this sheet. Figures self-populate on this sheet as they're put in other parts of the program. If it can be used on this sheet, it automatically self-populates. As well as which debts are to be paid off is also self-populates. Moving on, we have our good faith estimate, and we have our truth in lending form below, and our 1008, I'm scrolling a little fast, sorry about that for this video, and we have our 1008 form down here at the bottom. Moving on, we have our title order form, appraisal order form, borrower certification and authorization form, as well as 4506T. All of these forms, if there's an area that can self-populate, it automatically does. If there's information that's been entered somewhere else in the program, it will populate over onto these forms. These arrows at the bottom help you scroll back and forth between the tabs if they don't fit all the way on your screen. So right now I'm going to come over here to the Deal Worker tab, take a quick view of my loan, and if everything's set up the way I would like, I can go ahead and print out the forms, get the loan turned into processing, and get my loan closed. So that concludes this demonstration video of the Mortgage Maker Pro loan origination software. Please visit CalculationCrunchers.com for more information and other great programs. Thank you for watching, and good luck in your mortgage career.